Thank you very much for joining another session of RM Smart Investing. I'm so pleased to have you. Uh, Today, we're going to be talking about something that we are all familiar with, but I'm not sure if we have thought much about investing in this asset class, which is a part of the commodity assets, and it is the livestock. So when we think about the livestock, obviously we think of the cows and think about beef and perhaps um, hogs, and think about bacon, and but it's not something that we actively think about. Actually, is there any way to invest in these commodities? Perhaps some of the biggest investments would be, maybe you think about the cattle ranchers and thinking about these companies and buying these ranches and buying the cows and or the calves and or the farms with the milk. So hopefully at the end of this class, you have a little more clarity, understand the different classes of livestock and some of the ways that we can directly actually in a way to invest in the products of as far as investing in this asset class. So again, this livestocks. Why even we consider this, and what has to do about investing? Now, this is the latest. This is actually end of when we think about the year that we had last year. Obviously, with the inflation, but also we had the war in obviously Ukraine. But you can see how it has affected the nations, the countries that they really depend on the necessity, which is the food. And there's a lot of agricultural and as well as, again, meat products. And so it is actually politically also, it becomes scary when you look at some of the countries that when you look at Ghana, for instance, or you look at Lebanon, the inflation was 142% on the food. Now, granted, the highest time was in right at the end of February when the invasion of Ukraine by Russia. Obviously, there was a lot of issues with the supplies and the whole as far as production, and we have come back, but we're still way ahead of where we have been in 2019, in 2020, for instance. So that's why it's important to get to know about the food commodities. And as I mentioned, we are familiar with some other foods like wheat and corn and soybean, but not much with the, again, from the livestock, which is, again, the cattle. And it can go chickens, even it could be fish, poultry, and basically hogs and pigs. So let me start with first, there are different classes when it comes to livestock. And when we think about cattle, there are two main types when you want to invest in. The first one is called feeder cattle. And what we mean by feeder cattle is it's usually when the cows, when they are born, and this is the initial stage that it is a time that the ranchers, they let them grow, and they make sure they feed them, they let them grow. And as soon as they get to about 600 to 800, they go to the feed lots or the feeder lots. So there is a place that then what happens, these cattle, they get fed. Hopefully they get fed the grass fed, natural. And in the meantime, what happens, the whole ultimate goal is make them ready for slaughter. And that's when they hit the 1,000 to 1,300 pounds. So for the few months that they are there, that the feedlots purpose is to make sure they feed these. And of course, because there's so much uncertainty, these are the feedlots, the feeders, they have to ensure that they are not paying too much when they buy, and since they don't know what the price will be, that's when they start something called hedging. They want to make sure they pay something that it's not too much initially, and they want to get paid above the market when they sell it. So there's that uncertainty. That's what they're investing in, let's say, in feeder cattle, and we will see in the live cattle becomes important. So you see a lot of commercials involved here, and it's more of a hedging tool. So anyway, so the feeder cattle is the first stage. Now, we've had the futures market since 1971 in feeder cattle in the Chicago Mercantile Exchange, which means you can actually invest in the futures in feeder cattle. Now, the main active, again, the feedlots and feeder cattle happen right in the Midwest, as you can see the screen, and the big one obviously is Texas, and you can just remember all those Western movies you've been watching. So the next type is the live cattle. Now, the live cattle is the second stage. Now, this is where the feedlots try to get to the point, we talked about 1,000 to 1,300 pounds, that it will be, at that time, they will be ready for the slaughter. And this one of the oldest ones in the Chicago Mercantile Exchange, as far as commodity agriculture goes, it's been around since 1964. Again, there's a lot of hedging going on. So there are lots of countries that they actually produce the beef. That's what it comes from, the cattle. So the largest country in the world is United States, and has about almost 22% of the world production in beef. The second largest is Brazil, and there's China. So you can see between China, Brazil, and United States, almost 52% of the world production comes from these three countries. So, and it is an important part of the economy, especially in the food production. Now, this is as of actually just today, February 22nd, 2023. Now, the projection is the global beef market is expected to reach almost 422 billion by year 2028, and on a compound annual growth rate of 4.05%. So why is that? We will touch bases on the factors, but the biggest consuming countries most countries that eat beef are, number one is United States, Brazil, China, the producers, but also the consumers, the European Union, India, Argentina, Mexico, Russia, Japan, United Kingdom, and Canada. So these are the consumers. Now, we have seen, I would say, up and down with the dietary changes and the taste, and so it goes up and down. But at the end of the day, there's a lot of demand for beef, for instance. Now, as far as the volume goes, basically, as far as importing countries, the majority of the largest importing country in the world are China, United States, and Japan. There's almost 1 billion pounds of beef is used in Japan, for instance, Hong Kong, South Korea, United Kingdom, and so on. As far as exporting countries, Brazil is the number one exporter of the beef. Number two is the United States, and number three is Australia. And you see Australia and New Zealand, and they are big in the United States. For instance, we like to have, for instance, New Zealand and Australian beef, but also like lamb. They are very much appreciated in the United States, for instance. So the third part that when we talk about livestock, is the lean hogs. And lean hogs are the pigs that have reached the 250 pounds, and they're ready to be slaughtered. And it can happen, actually, it could be within 6 months. Now, the contract started in 1966, and again in 1997 upgraded, but it is at Chicago Mercantile Exchanges. A byproduct of lean hogs, we also have the frozen like pork bellies, and those are also being traded. But these are the three main contracts that you can actually invest in. When we think about the pork market, now you can see how large of a market that is. This is as of January 25 of this year. You see that in 2022, we have $254 billion of the market for pork, and it will be almost double. It will be at 418 billion by 2028, and that's a compound growth of 8.6%. So the biggest producing countries in the world for pork is China, European Union, United States, Brazil, and Russia, and Vietnam, and Philippines 7. Now, as far as the consuming countries, we have China, European Union, United States, Russia, Brazil, Vietnam, and Japan. As far as importing countries for the pork or lean hogs is Japan #1, China, Mexico, United Kingdom, South Korea, United States, and Hong Kong. And as far as the exporting, European Union is #1, United States second, Canada, Brazil, United Kingdom, Mexico, and China. So these are more of information to see that there is such a wide variety of consumption and countries going on. So why even be discussing this, and what kind of characteristics this asset class has, and why we even should consider it? Well, #1, it is a major source of protein. Now, we have had, for instance, alternative meat products. They are vegetable based, and there's a lot of talk about, some of the harms that could be coming from the red meat, for instance. But even considering that, we do have a growing middle class, especially in emerging markets. And the middle class would like to have more quality food, and especially now with organic, like grass-fed beef, talking about steak, and they want to enjoy. This is part of actually part of eating food is the enjoyment and the pleasure. So because of the growing middle class, this asset has been growing, and it will grow more because we will have a larger developing countries and larger middle class. Again, because it's an important source of protein. Now, one thing about this commodity you don't hear much because it's not widely followed. It's not something you turn the Bloomberg on and they talk about, the lean hogs or the cattle. And although, in the 19th century, it was mainly followed, especially it was something like with the lean hogs, but it's not. So you don't hear much. And that's what it would be good to understand it more. The other characteristic it has this cyclicality, and I will touch bases on the cyclicality in the next slides. And then it's also is very seasonal. What we mean by that is, there is more demand at certain times. Like in summer, people like to grill because the weather is nice. They like to go out, so there's more demand. In winter, in Easter time, Christmas time, there's more demand, for instance, for ham. So there is that seasonality aspect of the livestock. Also, they are a diversifier because they do have a low correlation to the especially stock market. They have their own, again, fundamental factors. So in the times of like the inflation that we've had, you could see that they could become a good hedge. When we talk about cattle, for instance, cows are very actually low maintenance and they have a high output. And when we think about high output, cows actually provide not only meat, but they also provide milk and its byproducts. If you want, you could also have leather, for instance. And if there's sheep, there's like wools. So that is a one of the attractive things about, again, when we think about livestock, and when we talk about hogs, they obviously we have meat. Out of the 250 pounds, you get about 90 to 95 pounds of lean meat. So that you can have the meat, you have ham, bacon, sausage. So these are the products from the hog. So that's the characteristics. But what are the challenges? And one of the biggest challenges that we have with the asset classes, especially with the lean hogs, is the volatility. It is also most likely because also it's a low liquidity. It's not, especially if you talk about investing, let's say you want to do futures, they're not as liquid as other agriculture or financial instruments. So you don't have much as far as investability in that sense, but they're still available and you could do that. The other challenges you have, which affects, and I would say it's a risk, is the weather. You know, you could have the drought, and with the drought, obviously, it can wipe out the whole cattle of the ranchers and affects them, make them weak. It could also cold effects. So the weather also plays a role. The third one is the disease. We have, right, put out here, like we had mad cow disease that, you know, it started in the United Kingdom and, you know, it went around. We've had, when we think about the flu, the chickens, for instance, and the poultry, and like Hong Kong. And so these are the things that affect, again, the supplies. And obviously, then it affects the demand. Now, the change in the consumer taste and the dietary trends. Now, as I mentioned, there are countries that they would love to have higher quality of protein. They want that. But then on the other hand, you see people becoming vegetarian. They don't like the effects of the red meat. They become health conscious. So there's a pros and cons. And of course, we've had the pandemics. With the pandemics, it affected everyone, but also not only from the supply side, we also affected, obviously, the demand. When you have restaurants closed, nobody's going out, basically that completely shut down the business of the service side of the thing. So there was not much demand. Even up to not too long ago, I mean, still now, in China, for instance, the farmers could not do farming, for instance, and, you know, raise the cattle. And so that also has made a difference. The transportation cost, obviously, it has in many ways, when we are talking about whether we are using domestically, or let's say we are importing from Australia or New Zealand or Argentina, that also is a challenge. Another major one, which it has really affected the price of the livestock this past year and a half, has been the feedstock prices. Basically, when we think about it, we think about the corn feed, the soybean feed. So when the price of those underlying assets, the grains, have gone up, obviously it has become more expensive for the livestock feeding. So that affects the price. The last but not least is been a lot of talk about environmental issues, the ESG, and the effects of, let's say, the cows, you know, the gas effect of the cows around the globe. There's almost 1 billion cattle around the globe. So the question we should ask is, you know, we've had for thousands of years, we had bisons and they've been around, so it hasn't affected. The only difference, I would say, the argument would be, you know, bisons move a lot, so they will be migrating and they're moving. When we think about a cow, they do not move much. They stand. So that has been one of the reasons that the environmental issue has become an issue. So I mentioned about cyclicality. So when we think about production cycles, we have, there is a tend to have this predictable cycles. So what happens is it allows to see how the price will move. And again, from trough which is a low point, to the peak. So what we talk about, again, the full cycle will be from trough to the next trough and or peak to peak. So for instance, hog cycles typically last an average of 4 years. Cattle cycles, they last about 10 years. So when we have an expansion phase, there's an increase in livestock prices. So it encourages the producers to retain female animals to increase the herd, which can reduce the supply and cause further price increase. Then, so they don't want to get rid of the females, so they want to have more production. So then the production of offsprings by these females may result in oversupply and causing the prices to decline. And this goes on and on. So that's how the contraction phase of the cycle happens. During the contraction now, the additional females that we don't need, they rather than going to the breeding herd, then they tend, because they tend to increase the supply even more, could cause prices to decrease. So now they have to get rid of them. Expansion phase is dictated by time it takes for female animals to reach breeding age and production offspring, while the contraction phase is influenced by the price fluctuations. Like anything else, we do that in agriculture. We've talked about relationships between corn and soybean, for instance. When the price of soybeans goes up, and the corn farmers, planters, they decide to start planting soybean, and then now you have oversupply in soybean and undersupply of corn. So that's the cyclicality happens. So these are some of the, this is from 2011, 2020, is like, for instance, from the seasonality pricing of 500 to 600, the feeder cattle. This is feeder cattle. So you can see the March becomes a peak time. So we have the movement from January to March. Then the summer times comes because we've been not producing the supplies. Now this is the consumption time, and it's winter time, so the price is low. So the spring is, late winter, and spring is the high season. And you can look at the same thing on the 700 to 800 pounds again. So as far as the month goes, you can see this is the actual the price of this is for the live cattle. That was feeder cattle I showed. So this is the live cattle, and again, winter till beginning of almost when we get to the spring, low, and then the summer goes up. So this is another seasonality chart. So let's look at going back to beginning of 2001 and why it's interesting to pay attention to this. Look at where we are since 2020 pandemics. We almost doubled, and basically why the stock market had a big fluctuations. This has had actually a nice trend. So it has been a good diversifier if you had something invested in feeder cattle, for instance. Again, one of the things when you think about investing, majority there's a private equities actually, and there are people who buy the feed lots, for instance, and that's how they make their money. They buy the feeder cattle, feed them, sell them as a live cattle, and basically pocket the difference in the prices because now they are ready to be sold. Look at the live cattle. We are almost in the high of the 2014. So it has had a more than 100% movement. We did have a little correction 2022, but then we resumed our moving higher. So as I mentioned, the volume becomes an issue, so it doesn't have as liquidity as other contracts and assets. Now, I mentioned about lean hogs. They are pretty volatile. I mean, this is a monthly. This is from 1999. So you really have to be either very seasoned to do this, or just use subcategories. Maybe the stocks that I would recommend and maybe even ETF or ETN, exchange traded fund, rather than doing a futures on these things. So these are mostly, again, for the commercial, for the hedgers. So, but these are big moves. We go from 50 to 120, come down to 70, go back to 125. So I hope you have a little better picture of what does that mean to invest in livestock. So now that you have a little, you have interest, so how do we invest in that? So some of the easiest ways will be obviously if you do futures market, and these are the there's electronics and these are the pits. So these are for the live cattle is LC, feeder cattle is FC, and lean hogs is LH. So you just put down like any other futures market. You just trade the near month if you like. But the most attractive way for a lot of people would be either investing in an exchange traded fund. We did have few. We have some food related, agriculture related. A few years ago, we used to do that, but again, because the volume was so low, they are not in existence. Some of them closed in 2019. So one diversified thing, you could use a DBA, for instance, but specifically for livestock, there's one exchange traded note is cow, and I will, we'll go more in details. There's some stocks that you actually could use. I will go more details about this as well. The way that volume is not that much in this one. Hormel or Pilgrims or Tyson, these are the big ones. Like Tyson is the biggest, and then the BRF is a Brazilian meat company. So that's another way. But as I mentioned, you can use options also on the futures or on the notes or stocks as well on these stocks. So what is cow? Cow is IPAT Series B Bloomberg Livestock Sub-Index Total Return ETF. And basically the underlying asset for that holding is live cattle and lean hogs. So you can see majority, 2/3 is live cattle. And this is for the past almost 3 years, or since 2020, from the low of March. This has been the movement, pretty steady. You can see there's not a lot of excitement. The volume is not a lot. You can see this is as of today, for instance, it's only 7,000. So, but it is a diversifier. So it has nothing to do with it, really doesn't have big correlation with the stock market. So if you want to invest internationally and you're looking for what is the best ways, and you are internationally have access, then the #1 company in the world for especially for pork and beef, actually, but #1 pork is the JBS. And you can it's a Brazilian company. Excuse me. So it is over counter in the United States. So this is the symbol. The second best way to invest in, if you like to get involved with again the poultry and food related, is the Tyson Foods Pilgrim's Pride Corporation. One of the largest ones, it's called Danish Crown Group. That's in Denmark, and Denmark is a very big, I think it's the second large usage of, as far as the sausage goes and the bacon and, hogs related. So then we have in Netherlands, we have YM Food Group. In China, we have WH, which you can, again, use over to counter, but be careful, not a lot of volume and the spread is high. So WHGRF is a symbol. We have Hormel Foods, which is a New York Stock Exchange, HRL. We have the Muyan Foods, and again, that's in China. It's not listed here. Everybody hears about eggs are up 70%, 65%. Well, if you are interested in the byproduct, again, from talking about from the poultry side, you have Cal-Maine Foods. Its symbol is calm, so you can also invest in that. Now, a little note about the JBS SA, which is a Brazilian company. It is the largest meat processing company by sales in the world. So a little information. It is the #1 producer as of today, actually, number producer of beef in the USA, and it is the #2 producer of pork and poultry in the USA. So just a tidbit, it's information for you. So these are some of the sub companies that JBSA is involved with. So basically just to name a few. So one last thing is there are some resources. You can go to USDA, for instance, and you know, it's a government agencies. You can look at agriculture. CME group is good. Every day I get something, it's called daily livestock report. Again, you don't have to get heavy to this. It's a one-page report. So I just like to have a glance at it, and it comes like in the mid-morning or so. I just take a look at it. I also put down here how much information you can get, whether from the agriculture reports. You can see there are all these reports coming for the poultry, for hog reports, macroeconomic demands, cattle reports. So, and then again, CME has a lot of information you could use. But the sample I just want to show you, this is a sample that I get. This is as of yesterday, for instance, February 21st, and it just gives us what is happening in the world of cattle. It has been going higher, you could see, and what is the outlook. So basically, this is, if you ever need it to, I mean, I can provide this, but there's lots of information out there if you really want to get involved with this. Again, liquidity becomes an issue, and I don't expect you to become a cattle traders. I don't expect you to do the futures trader. I just thought it would be a good idea to at least have some kind of understanding what class is this. And then last but not least, you can see the average price summary for, again, when we think about the hogs, the cattle, the chicken, then all kinds of information. This is as of February 18, 2023. So with that in mind, I just hope it was informative. It was something that I'm hoping that you feel you get a little more confidence when somebody talks about investing in, you know, beef, or you think about some of the companies that we deal with, and for instance, a lot of restaurant chains, for instance, Wings, you know, Wingstop, you know, it's all most people know Buffalo Wild Wings or the Wingstop, you know, the chicken related. So, you know, they're publicly traded. So you have a little more comfort of understanding these. So with that in mind, I'm gonna stop the recording and answer any question.